If you hold Bitcoin for over 4 years, your probability of being underwater on that position drops to less than 1%. If you hold it for less than 6 months, there's a 50-50 chance you're either up or you're down. And if you hold it for less than a month, you're basically gambling at that point. Every time long-term Bitcoin holders have been underwater, they've recovered to new highs within 2 to 3 years. Short-term holders, on the other hand, they usually sell at the bottom and never even get back in. My name is Tristan. I've been in blockchain and crypto Bitcoin for over 5 years now. And today I'm breaking down 6 key on-chain metrics that show why holding periods fundamentally change your odds in Bitcoin. And blockchain data is 100% transparent, and it shows clear patterns that separate the successful traders from the unsuccessful ones. And by the end of the video, you'll understand exactly why the most successful Bitcoin strategy is also the simplest one. And I'll show you the on-chain proof. So let's start with a fundamental chart in Bitcoin's history, the long-term holders percentage in profit, or long-term holder profitability. This basically shows the percentage of Bitcoin held by these long-term holders that's currently in profit. As you can see, and even during the worst bear markets in 2011, 2015, and 2018, and 2022, all of them have corresponded to long-term holders' profitability never even dropping below 40%. And we define long-term holders as anyone who's been in Bitcoin for over 155 days, or holding that Bitcoin in their wallet for over 155 days on chain. And if you compare this metric, so if you look at the short-term holders in profit percentage, during bear markets, their profitability drops to 10 to 20% in bear market corrections, and at bear market bottoms or close to bottoms, all short-term holders, 100% of them are in loss historically. And during the 2022 crash, over 99% of short-term holders were in loss. So this math is pretty brutal and undeniable, to be honest. So it's pretty jarring, to say the least. But I wanted to discuss about why 155 days. So why do we distinguish one holder being a long-term holder after holding for 155 days and a short-term holder for less than 155 days? This isn't something that the industry just made up. It's not arbitrary. It's based on a statistical analysis, actually, of Bitcoin's holder behavior. After 155 days, the probability curve of the selling drops to just 3 to 4%. This is similar to a concept called the Lindy effect. And the Lindy effect basically says that the longer something has survived, the longer it's likely to continue surviving. In Bitcoin terms, the longer you've held without selling is less likely you are to sell in the future. And most people who do panic sell do it within the first few months. But if you make it past 155 days, you've survived multiple corrections without breaking, and that's sort of the idea. You can also think about it psychologically too. If you can hold Bitcoin through 5 months of volatility, through 10 to 20% dips, throughout all the fear, you've basically proven you're not going to panic sell, and you've crossed into this long-term holder territory that the industry has described. So right now, 77% of all Bitcoin is being held by long-term holders. These are the people who understand what they own and aren't really trading based on emotions. But honestly, here's where it gets pretty interesting. Let me just shut off these real quick. Long-term holders have a massive cost basis advantage compared to short-term holders. Their average cost basis actually sits around 36.7K, while short-term holders are in much higher, around 111K, 110.9K right now. Another interesting thing we can see here is if you zoom in on we're just going to zoom in on 2017 and 2021 bull market and bear markets. You can see that just based off of the rate of change of the two cohorts of their actual cost basis, you can see when Bitcoin crashes, essentially long-term holders are still sitting pretty at this level. Like the cost base isn't changing that much. And that means they're not really selling or doing anything at this point here. Conversely, in bear market or in bull market tops, they're still buying this entire way up, and in the bear market drawdowns. Conversely, if you look at the short-term holders, they're buying on the way up, and then they stop buying immediately after the top, and then they start selling. Their cost basis goes down. They start selling and offloading the Bitcoin. And only after Bitcoin bottoms sufficiently and then breaks out of the bear market bottom is when the short-term holder cost basis starts to rise and the price breaks above the short-term holder cost basis, which typically denotes the end of the bear market, when the short-term holder cost basis breaks through the price. And so the next indicator I want to look at is the long-term holder MVRV. This just shows how profitable long-term holding has been. So every time this metric hits extreme lows below 1, it basically marks generational buying opportunities, to be honest. And every time long-term holders are statistically in massive profit, we're approaching massive cycle tops. Long-term holder MVRV compares basically what long-term holders Bitcoin is worth today as compared to what they paid for it back in history. And above, like I said, above 1 means they're in profit, and below 1 means they're at loss. And currently we're reading just below the long-term holder 4-year rolling statistical standard deviation of +1, which is this dark red band here, which puts us in a meaningfully high statistical profitability for long-term holders, considering diminishing returns, of course, because as you can see, the volatility diminishes as the diminishing returns decrease for each cycle. So just statistically, we're applying a 4-year moving average on here and taking the +1 standard deviation band and sort of mapping that onto the price. And you can see that whenever we go above this band here, it can sort of correspond to when the market's overheated. So currently we're sitting at a long-term holder MVRV of about 3.14, which means that the average long-term holders are up 3x on their position. You can also look at it from the short-term holder MVRV, which currently the average short-term holder is currently about break even, 1.02 on their position. So I want to explain why this happened. So in my opinion, most of it is due to pure psychology and like game theory, of course. So short-term holders are driven by emotions, the fears during crashes, greed during the pumps. Conversely, on the other hand, long-term holders, when they're up meaningfully on their positions, which have been around 30, 10x, and 4x respectively in recent years, that can typically correspond to when long-term holders are taking chips off the table. Some people either need the money to buy a house for their family or sell, either because risk gets too high and it's just natural for them to want to offload when you're up so much. And so we can see from cycle after cycle, this pattern essentially repeats. In the bear markets, massive accumulation into long-term storage, long-term holder wallets. And in bull markets, massive distribution from long-term storage into short-term holders. And then as the bear market continues onward, a massive increase inflow for long-term holders and a massive decrease in short-term holder supply. And this is a binary representation. So a Bitcoin can either be held in one cohort or the other. It can't be both. It has to be a binary representation out of the percentage supply, the total percentage supply, because it's just based on time. So yeah, it's just like this is like clockwork, to be honest. And so here's the most important lesson in this video. In Bitcoin, time in the market beats timing the market every single time. And the on-chain data basically proves this mathematically. So what is the data telling us right now? Let me show you in across a couple of these metrics that we've discussed. So the long-term holder profitability is currently at 100%, and it has been for quite some time this cycle. Short-term holder profitability is currently sitting around about 64%, 63.81%, and has been climbing slowly after this pullback we had to 109K. And then long-term holder cost basis is currently at, like we discussed, is at 36.7K, and is typically marked like a major cushion for the price. And whenever we get below this point, I'm not saying we're going to get below it at 36K, because the Bitcoin price could go up, and then we could see long-term holder cost basis go up as they buy. So The short-term holder cost basis, on the other hand, is at 110K right now. So if price holds above the short-term holder cost basis, historically the bull market has still continued on. So on a positive note, that's true right as of now. So the math is pretty clear. We're in a phase where long-term holders are in a decent amount of profit and slowly offloading some Bitcoin. And historically, when they're in a decent amount of profit, they're going to be selling some Bitcoin and offloading it to short-term holders. And while they're doing that, short-term holders are buying, and history tells us basically what comes next. And all in all, like, this strategy isn't even that complicated, to be honest, but essentially buying Bitcoin, waiting 155 days, ignoring the noise. The blockchain data shows you that 100% of the time this works over Bitcoin's history. And until proven otherwise, I'm going to stick to this. Now, I'm not giving you financial advice, and past performance doesn't, guarantee future results, blah, blah, blah. But 16 years of mathematical evidence of Bitcoin's price is pretty compelling, and so far it hasn't broken yet on the on-chain data side. So if you want to track these metrics yourself and see what long-term holders are doing, short-term holders are doing, the profitability, the realized profit is, we also have those metrics on here too. Everything I showed you today is online on the website, chartinspect.com. Link is going to be in the description. And I'm also creating a series on reading Bitcoin, these videos. So if you want to understand the difference between smart money, retail behavior, when to buy, when to sell, that sort of stuff, hit subscribe and like and comment and share it to your friends so we can get this out to more people. Thank you guys for watching. Bye.